Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, November 11th, 2010. Well, folks, the broader market is lower today on this Veterans Day. Volume is extremely light as the bond market is closed. We anticipated that light volume issue today, although again, CSCO earnings from yesterday after the bell are causing a lot of selling or pressure to the downside in this market. Again, CSCO reporting earnings that did not meet Wall Street's expectations. Let me throw up that chart right now. CSCO is the symbol, and you can see again getting absolutely demolished today, trading at $20.65 off a low of the day of $20.25. I had told the chat room this morning if this stock got below $20 to play the even number. It never quite got there today, and again has had a small bounce off the lows, but for the most part, this is an absolute demolishing of this stock, folks. I mean, you're talking about a stock that is not that much smaller than IBM or some of the other big players out there. To see it down 15% on the day, that's an absolute beating. I mean, that is something you do not see every day. And again, obviously what they said was very bearish. They basically talked about spending, government spending, and other spending on this type of technology. The networking stuff was slowing. That is very, very bearish for the overall market as well, as everyone's thinking because of all the Fed stimulus and the asset bubble that all this spending is going to be increasing, not declining. And again, CSCO talking very bearishly. Earnings were not great. Margins were not great. And again, the stock is getting hammered today. So again, that's really the catalyst for the downside move today. Whether or not it continues to be a down day or not, we'll have to see by the close. The lighter the volume gets throughout the afternoon session, the more likely the market goes sideways to up, but you just never know. Obviously, this is very bad news, and right now it looks like the market will maintain its downside momentum. Maybe not go back to the lows of the day, but at least stay with the downside kind of bias for the rest of the day. All right. Tomorrow, first big day of POMO coming up. Again, since the new schedule on the New York Fed website was released, POMO, permanent open market operations. And again, that's basically where the Fed is taking that $105 billion over the next month, putting it to work in the markets by buying treasuries from banks. The banks get the money, they put the money into the market, and it helps prop the markets up. So tomorrow's a POMO day. We'll find out if that means it's an up day tomorrow. The Friday effect could be in play as well. All right, let's talk a little bit more about what we're seeing on the intraday chart here. The gap down today took us below our key master level at the 121.50 level. 121.15 level. Once you got below there, you started to sell off. Where did you go? To a perfect double bottom from yesterday's low. As we talked about in the intraday stock chat, I called out a long there. I said anyone that wants to go long between 120.60 and 120.70, that's your area of entry. We pierced that 120.70 beautifully, and again, the long was initiated. I basically said this. I said, listen, you could take 20, 30 cents off this trade, or if you want, hold it for a good portion of the day. You'll probably get even more out of it because, again, the light volume as it comes in would most likely float this market up. Sure enough, take a look. From this pivot low right here, look at the move up you had. You literally had a move from 120.68 to a high pivot here of 121.45 or so. You're talking about really a 50 to 80 cent move on the SPY there. And then you've pulled back and just chopped around. I mean, that's really what's going on now. You came down, you came up, you came down, you came up. You floated back up to this double top. Notice this double top right here. You hit that, then you pulled back into this little purplish, pinkish trend line. This trend line is right with the 20 moving average. It's only a minor level of support because, again, you chopped through it so many times. If you break below, this is going to be your first stop of support right down here. And, again, this can be a scalping opportunity for the afternoon session at 120.95. And then if you take that out, then I'd look for the double bottom low of the day at around 120.65 to 70 as well. So those are your key levels that you should be watching for the rest of the day. Again, on the upside, if you start to rally up and take out this blue line, 50 moving average would be next. If you take that out, then you're going to be looking for this little pivot low right up here as your next major level of resistance, and then ultimately gap fill and the 200 moving average up in this range. All right, so those are your key levels on your intraday to watch. I'm keeping a close eye on the 60-minute for a couple different reasons. Number one, what I have to say about this is you're creating a bear flag on the 60-minute. See this consolidation right here? See the blue trend line? The blue trend line has been a key trend line that we've followed day in, day out for the last 2 to 3 weeks in the nightly videos to the Research Center members for a couple different reasons. One thing I said to them is every time you get below, either the next day you back above or you get back above this blue line by the end of the day, we're going to be watching that very closely. But the bear flag can clearly be seen here in terms of this move down. Take the gap down as the downward move, and then sideways consolidation there. So that's a little bit on the bearish side right now. And again, we'll have to see, does the light volume on Veterans Day with the bond market close win out? In other words, the market floats sideways to up the rest of the day, or does the bear flag on the 60-minute play out to the downside? And again, whatever happens today, then what happens tomorrow? Tomorrow's a Friday after a little bit of a holiday-ish type day today. We know the Friday effect is very possible as well. And again, you have to go into tomorrow thinking neutralish bias as well. But keep an eye on the patterns on these charts. The patterns, again, ever since the cycle was called by my partner Nick here over the last 3 days, it looks like something's in the works with a little bit of a downward cycle. We don't think it's a big cycle, but again, a very, very good call on his part over the last couple days saying this is a cycle pivot based on calculations and cycles and all that kind of stuff that he does. And it does appear that it has come into effect. We really haven't had this much volatility to the downside in 2 to 3 months at this point, and finally we're getting it right as he called the cycle literally a week or so ago. To us in the company, we knew about it about a month ago, but he gave it out as a call last Friday going into this early portion of the week, into the midweek session. So again, very good to see that as well. We'll follow it very closely and see again, but very nicely done. All right, let's go over the dollar. The dollar is stronger again today. A lot of reasons behind the dollar's strength today. We talked about the bottom being put in on the daily chart, and I touched base on this right here. We took out the 2009 November lows about a week ago from today, and I talked to my premium members in the Research Center. And by the way, folks, if you're not a Research Center member, strongly encouraged to become one because of all the keys that we unveil, the education in the very least, but let alone the swing trades and stuff. Good money on Las Vegas Sands on the short side, some other plays as well that we continue to release on the Pro Trader and so forth. But bottom line is this. One thing I talked to them about was how you did not confirm below the Thursday low breakdown of November 2009 lows on the dollar. That was a key signal you could be seeing a reversal. Until you confirm, always anticipate a reversal. Sure enough, the reversal did come. That was a dead-on call. And look at the dollar since then. Now, why has the dollar done that? Well, a couple reasons internally and a couple reasons globally. The global reasons on the dollar are this. Ireland, major issues, and they're becoming worse and worse. Spain, Portugal, rumblings about those again. I mean, it's starting to happen again, what happened a while ago, where you have these kind of default issues and worries about the debt levels and so forth of many of these European countries. And the more it grows, the more people rush into the dollar. All right, so the dollar would go up then. If the euro's dropping, dollar's going up. That's what's happening. All right, so that's the global issue. The intra-market or intra-economy in the U.S. issue is something in regards to the Federal Reserve. The Fed knew, and again, this is something I talked about even before it happened. I said, guys, I really don't see us breaking below 2009 lows because the Fed knows if we do that, you could be risking a collapse in the dollar. And if you collapse the dollar, then we're talking about a major issue for the markets that will not be easy to recover from. So again, it got below. It shook out the weak hands right here in the market. Anyone that went short on that breakdown, wrong. Why? Because you didn't get confirmation. It was not a good shorting opportunity as we told. And sure enough, a reversal here to the upside. And again, know your levels. You can see a resistance level coming up on the dollar, and then the 50 moving average right up here at 22.85 on the UUP. All right, let's go over a couple of the charts here. Flip back to the intraday. You can see the dollar's inching towards the highs of the day. Believe it or not, that move up right here is coinciding with the down move in the spiders right here. See this little downward down tick? But again, the volume is so light, I don't think you're going to get much downside in the dollar today. All right, what are some stocks in motion today? Well, the commodity stocks are keeping this market up. It's no doubt about it. Take a look at Chevron. Chevron today, higher on the day. Even with the markets taking a hit today, with Dow's down about 100 points, Chevron is up 55 cents. Good move there. Other commodity stocks continue to have good moves. Southern Copper up 63 cents, although that is starting to come in just a little bit here. By the way, downward move off a topping tail. See that topping tail right there? Downward move in spirit of bear flag pattern right here. That tells you more downside, and look at the drop in Southern Copper. I actually think Southern Copper is a great short up here, to be honest. Look at the extension move from basically 25 bucks to almost 50 bucks, 100% move in the last couple months. That's a little outrageous in my book, and I do think it's probably a good short, although you have to be very careful, very, very careful. But I wouldn't be surprised if to see a full all the way down to somewhere in this range, back to about $40 or 39, 38, somewhere in this range. The 50 moving averages right here. You have a key gap fill right here as well. That would not be a shock to me on Southern Copper in the not too distant future if the market comes in a little bit off these meteoric rising levels. All right, what else? Another stock I called out this morning in the intraday stock chat was Rhino, R-I-N-O. A lot of kind of nervousness about possible iffy stuff going on with that company. But bottom line is, I called this out today. You have a nice little double bottom here, folks. Take a look at this double bottom right here. And again, on the break of 11 bucks, I said you could probably be a buyer of this. I called it out at $10.85 to go long this morning, really right on the open. The stock has bounced back already to over $12. It's hovering right around 11.63. Huge move right there. I myself took 50 cents on that play with multiple thousands of shares in the play right there on that Pierce. So again, I waited for the Pierce right here of a double bottom, took it long, and look at the bounce that you had back up. The stock just a week ago or so, 2 weeks ago, was trading at about 20 bucks. It got down to as low as 10.26 today, but a good money maker right there in regards to RINO. All right, let's see what else we have today. Other than that, again, market is pretty much on the quieter side. I think that's all we'll go over today, but I do encourage you to join the intraday stock chat. If you have the ability to jump in even for an hour a day, it's worth it. Otherwise, what you want to do is just join that research center at inthemoneystocks.com. It will enlighten you. It will change the way you think, change the way you trade, become more of a profitable trader, become more of an experienced trader, and don't get kind of skewed by all the hype. Take care, folks. Have a great rest of the day.